Hi, thanks for joining me again. This is the US Futures Weekly Chart Analysis for the week ending 9th of September 2022. The first chart today is the US Dollar Index Futures. We'll put in the previous lines we've had for the last few weeks. You can see some supply was drawn out on this bar previously, and the market came back and consolidated for a month and then accelerated higher. We've had price moving higher for the last 3 weeks, and once again some supply has been drawn out on an increase in volume this week. The close was within the range of the previous bar, so there's no serious issue at this point, but supply has been drawn out. That's selling pressure in the market. You may find that this market will go through a period of consolidation again in here, probably adjacent to this line. If the weakness continues and it's ongoing, a breakdown below this line would actually be the first significant move for some time. So at this point, yes, some supply has been drawn out. There's no serious breakdown at this point, and we'll see how the market trades again next week. Next chart is the E-mini S&P. This is the S&P 500 index futures. Through here we had a period of consolidation and some buying support came in. The market's moved up. This is the breakdown line. The price failed at the breakdown line and came down in line with the US dollar index for 3 weeks. This week the US dollar index has been weaker, and that's allowed this market to pop up on a reduction in volume, but about average. So this was a reasonable move. There was no great oomph behind it, but it was mostly in response to the weakness in the US dollar, I expect. This level here, the breakdown line, is the important line at the moment. A recovery above that back into this zone would be a much more significant move. At the moment, price did reverse a bit this week, but it's not a significant move at this point in time. The 10-year note futures, you can see when the lines are drawn in just how weak this market is moving. The US dollar index was weaker this week, and this market could not even move higher. It still drifted lower, albeit unreduced and below average volume. This market's definitely not strong. It is trying to hold on within the range of this bar. This is last gasp support around the 115 or just above it. A break below that would really be a severe breakdown in this market. Copper price futures, the breakdown line is right up here, so well out of the way. You've got these 3 bars here that have higher volume. And while they're a while ago now, and any supply that was trapped there, at least some of it may have sold out and not be present anymore, this first bar, that's this volume, the highest of the 3, definitely caused some resistance as price moved up to it previously. And that means this level here is really the important level in the near term at around 375, just a fraction below it. Price reversed a little this week on reduced and below average volume, so mostly in line with the US dollar index. It would take a move above this bar's closed, and probably 375 is a round number, to push itself into this zone where I expect some increased supply will be drawn out from the left. Just how much is still a question, how much remains and how much has been sold. But at this point in time, it would take a push above 375 to really be significant. Gold price futures only traded with a narrow spread this week on below average volume. So there wasn't much demand in the market this week, even with the weakness in the US dollar index. This wasn't a particularly strong move. It was more a consolidation move just above the 1700 level. It's not particularly significant at this point in time. This breakdown line is the really important level in the near term. Silver price futures. Silver price futures were actually stronger for the week than gold, which is a little unusual. But overall, the gold chart is a far stronger chart. It was just this week that silver led gold. Volume was well below average, but spread was about average. So selling pressure was low in the market this week, and that allowed price to move higher with the tailwind from the US dollar index weakness, but it moved higher with an average spread, which was a pretty good effort overall. And it's recovered back above this potential breakdown line at the 18 level. So that was good for the market. Like crude futures have been holding on as best as possible, just below the lows of the range. It appeared there was accumulation going on within this zone. This week, the opportunity to break down was presented to the market. Volume was below average. The opportunity to break down wasn't accepted, and price bounced back, probably partly in line with the weakness on the US dollar index, and has closed right at the lows of the range. It's not looking particularly strong. There is a little demand in the market. Selling pressure was reduced this week. It doesn't look strong enough to move back into this trading range. I expect there'll be resistance at this level. The Aussie dollar currency futures don't appear strong enough now to recover back above 70 cents. It appears the market is more likely to attempt to find support around this 68-cent level, and it's doing a reasonable job to hold on there at the moment. This week's bar did recover, mostly trading the inverse of the US dollar index. You can see the previous 3 weeks where the US dollar index was strong caused this market to trade lower in response, and with the US dollar index trading lower this week, this market's just bounced up, which is exactly what you'd expect. Volume was about average, so it was genuine trading. There was no anomaly, and prices attempting to hold on around the 68-cent level. Bitcoin futures have broken down twice previously and are currently holding on around the 20,000 level. I expect there'll be some support down to 16,000, and a break below that we'll probably see 10 or 12,000 come into the picture. Some buying support came in this week. Volume overall was below average, but you can see that spread increased over the previous 2 bars and has pushed back up above the $20,000 level. And while it's questionable exactly what's going on, there's push me, pull you in the market here, buying and selling. And neither side, the buyers or the sellers, have really taken control at this point. There's high volumes being traded within this zone, so whichever way the market does break in the end, you're probably going to get a significant move. And it would pay at this point just to wait and watch and let the market do its thing, and then go with the side that gains the upper hand in the end. Just quickly back to the US dollar index. This is the chart that you really should be watching the closest. It plays such a part in many other charts. And you can see the weaknesses come in this week on an increase in volume. I'm anticipating a little period of consolidation through here, very similar to what happened here. A clear break and close below this level would be significant. So watch the 107.5, because that's probably going to be a significant level in the near term. Price remains above that, it's probably stronger than weaker. And if price breaks below that, it's probably weaker than stronger. Okay, thanks for your time again. Hopefully that was worthwhile watching. See ya.